All right, joining us now, John Carney, Breitbart economics and finance editor, co-author of Breitbart Business Digest, and Nancy Tengler, CEO and CIO of Laffer Tengler Investment. Welcome, kids. Nancy, great to see you back here in New York on set. The stock market, I don't think, reacted at all to the State of the Union, or no? What's your take?
John and I were talking about it. I don't think so. I think what the market's worried about most is the Fed going to make the epic mistake of tightening too much. And so you had a lot of Fed speak come out after the jobs number, which we know is going to be revised. We know it is. I mean, it's seasonally adjusted. There's a lot of quirks in those numbers. And right away, they started talking about how they were going to have to hike more. So I think that's really what the market's
Jay Powell said that again yesterday at the Washington Economics Club. Well, I know the Fed has an unemployment, Phillips curve wants higher unemployment. How much will they tighten? Biden forgot to mention all that last night, but
and the border, among other things.
And you're right. He didn't mention. He mentioned new equipment, not stopping the illegals. He just mentioned a couple $2 for new equipment. He didn't talk about the Chinese balloon. Never mentioned the word balloon.
No, he didn't.
It's good that we're reviewing.
I think we should start carrying around balloons in protest of, and then the left will have to start hating balloons.
Well, who was it? What's her name was dressed as a balloon? The one from Marjorie Taylor Greene. She had a balloon dress on. Anyway, Nancy Tengler, I'm trying to get some wisdom here. Stocks worry more about the Fed than they are about the State of the Union, because stocks assume none of this stuff's going to go through with the Republican House.
Gridlock's good. I think you wrote a book about that.
In part, yes.
So I think the market's focused on how far they're going to go, because we know from the last meeting that Chairman was a little more dovish in appearance.
Was he? That's so interesting.
I think he was. I mean, he could have pushed back on financial conditions. He didn't. He just sort of said, well, we may have to raise more. I think one of the problems is that you've got a group of people that all see the world the same way. They're in the echo chamber of Washington, and now they're all coming out and following the script. We may have to be tighter. We're going to have to be stronger. But the market has been leading this Fed all the way through, and the market did now. We're starting to see rates go up a little bit, but not a lot. And I think we'll get through this. When tomorrow's initial jobless claims, that'll be important, and then we'll see how this number gets revised. But Phillips curve, it doesn't necessarily work, and we can have low unemployment and strong economic growth without inflation.
Yeah, cut taxes, man. Speaking of cutting taxes, John Carney, what is it? I know Biden has Trump derangement syndrome. I get that. But he also has a stock buyback derangement syndrome. We're going to quadruple it. It went up to 1% in the inflation bill, so that means it's going to go to 4%. What's the point? I thought stock buybacks or dividends is just different ways of handing returns back to investors. Why is he obsessed about this?
It absolutely is. And they seem to believe that when you buy back a stock, the money sort of goes up in flames. It can't get reinvested. They complain that it's hurting growth. They say they want the money invested in growth and productivity. Guess what happens when you return money to they invested in growth and productivity. When a big, mature company doesn't see another opportunity to invest its own money, it should definitely be handing back the money. We actually don't want companies going out, wasting it on boondoggles. It's much better to distribute it out to shareholders, have the collective wisdom of the markets decide where the capital is going to go, rather than some CFO or CTO deciding where the money is going to go. And it's very strange that Democrats have focused on this, because essentially what they're doing is locking money up inside of corporate treasuries. That's what the effect of this would be. Maybe they like it because so many CEOs are sort of going woke now, and they think we could direct capital if we could just keep it out of the shareholders.
It's like putting it under the mattress or something. And then what are they going to? They invest it in T-bills and ready cash. I mean, the other thing that's so look, I've developed this sort of bizarre love for Biden. He just says this crap again and again and again. So last night we got to tax rich people because they're all dodging it. They are paying almost half of the total tax revenues. In fact, if you do federal, state, and local, Laffer or Steve Moore will tell you, I think they're well over half. So he hates rich people, and he's going after those evil, greedy corporations who, John, some of them pay less taxes, fewer taxes, because they're using the loopholes and
the tax credits
deductions
that
and
they're
credits
creating every day.
that the Democratic Congress legislated.
Well,
they're probably all investing in EVs.
I thought the most amazing thing that happened last night was that he scolded oil and gas companies for sending money back to shareholders. The left has been pushing for divestment from oil and gas, and he scolded them for not. You can't have it both ways. If you want less oil and gas exploration, you can't then scold the companies for also saying you know that you didn't invest it back in your business. The shareholders want the money back because they hear Biden say, well, we're going to use oil for 10 years. And the shareholders say, what? You're going to only give me 10 years on this?
I love that.
If I told you we were going to get rid of cell phones in 10 years, would you go buy Apple stock? Of course you would.
Hey, look, there's about 150 some odd million people in the market, one way or the other.
Right.
Right. IRAs.
Not just the wealthy.
Okay. So these oil companies and all the rest of them, however they deliver returns, they're giving it. I mean, yeah, they're giving it to wealthy people. They're giving it to the great middle class that opened up 401ks in the last 25, 30 years.
And the teachers' pensions and the unions. Yeah.
Right, which he purports to love.
Right. It's nonsense. And I think most people know that. But it doesn't serve purpose, because look what he's done to, as you point out, to the oil industry, and yet the permits weren't being, so they couldn't invest because the permits weren't being improved.
You turn the spigots off, so we're $1.5 million below where we were pre-COVID.
Right.
That's why prices went up, and yes, their profits went up. He started the boom in oil company. That's all.
The buyback,
it's his company.
The buyback tax, by the way, is also a tax on pension funds and people's savings.
Right.
Because particularly tax-free vehicles, they're not paying the taxes on the gains that they're getting. And so what happens is if you're taxing the companies for doing the buybacks, then you're actually taxing the pension funds that would otherwise be tax exempt.
Call Biden.
So they're taxing people's retirements when they say they're taxing buybacks.
Biden. That's,
well,
Akil is killing us. We got to get
okay. Well, just acquisitions.
But call Joe Biden and try to explain it to him. Give him a free copy of Breitbart. I
told him to subscribe to the newsletter.
John Carney and Nancy Tengler, the best of the best. We appreciate it very, very much.